Multifamily Mindset
podcast. Think bigger.
Welcome back, everyone, to this episode of the Multifamily Minute, where we break down complex multifamily investing strategies into bite-sized, actionable insights. Today, we're going to be tackling a big one, market research. And I know research sounds like something that belongs in a lab and not in the exciting world of real estate investing. But trust me, if you skip this step, you'll be throwing darts in the dark and you're hoping to hit a bullseye on a good deal. And we don't do hope around here, we do strategy. So let's get into it. How do you even choose the right market? What are the cycles you need to watch? And most importantly, how do you set yourself up to win big when investing in multifamily? Well, the first step is don't play the field and commit to one market. One of the biggest mistakes I see new investors make is not picking a market. They think, I'll look at deals everywhere and just jump on whatever seems good. But here's the thing, if you chase too many markets, you'll end up mastering none. Instead of skimming the surface of 10 different cities, grow roots in one. Get to know its trends, its key players, its opportunities. Because when you go in deep instead of wide, that's where the real magic happens. Now, how do you actually pick a market? It's a great question. That's actually where the real fun begins. You'll want to understand market cycles. So you can imagine the real estate market like a roller coaster with ups, downs, loops, and that one moment where you question why you got onto it in the first place. Every market goes through 4 stages. You have your seller's market 1, where prices are rising, competition is high, and new construction is booming. There's a seller's market 2. Things are starting to slow down. Prices peak, and smart investors start cashing out. Then we move into a buyer's market 1, which is where prices drop, foreclosures rise, people panic, also known as our golden opportunity. Then there's the buyer's market 2. This is where the rebound begins and smart money starts buying before prices shoot back up. You want to win big in real estate? You buy when everyone else is scared and sell when everyone else is greedy. So, now that you know that market research is critical, here's the $1 million question. How do you actually pick the right market? Here are the 4 best places to look. I'm not giving you a city, I'm not giving you a specific market. This works for every single one of you guys to do your own research. 1, look in your own backyard. If you live in a growing city, you already have a knowledge advantage here, so please take that in mind. If you don't live in a growing city, take a look at a nearby city. So something that's a 1 to 3 hour drive from you can open up great investment opportunities. 3, you can take a look at somewhere that you have connections. So maybe it's where you went to college, where family lives, or a place that you've just visited a bunch. 4, an emerging high market with high growth. This is where data comes in handy. Because where do you find these markets? That's going to be some investment forecasts like Marcus and Millichap and CBRE. They have pretty good investment forecasts. CBRE actually has a cap rate survey that they produce. Milken Institute has the top performing markets report that they do every single year. Comes out around February. This last one was just released. And if a city's jumping up in the ranks, that's a signal that, hey, you should pay attention. Now, once you've picked a few cities, you want to analyze a few key factors. So let's take a look at unemployment rates, population growth, job diversity, supply and demand, landlord-friendly laws, and upcoming construction. Now, what I mean by all of these is, unemployment rates, it's job growth. If jobs are growing, rent collections will be a little bit more stable. Population growth, of course, more people is just more renters. Your job diversity, you don't want one single industry to dominate. Otherwise, one bad quarter could tank the entire city. Supply and demand, you want to see, are there new apartments being built faster than the demand? You can take a look at absorption rates there because that can be a huge red flag. Your landlord-friendly laws, some states protect tenants so much that it's tough to operate profitably. I'm looking over at you, California. And then upcoming construction. If companies are building offices, retail, infrastructure, people will follow. So the bottom line is a great market has job growth, population growth, and a demand-supply balance that favors investors. So listen, if you're stuck on picking a market, it's not because you don't have enough information. it's because you haven't made a decision. Winning in multifamily is not about getting it perfect. It's about getting started. What I recommend for all of you guys here is just research 7 to 10 markets, or just pick 1 to 2 to start with and commit, right? You can always adjust later, but that indecision will cost you far more than making the wrong choice. Anyways, that's all we had for today's episode of the Multifamily Minute. If you found this valuable, share it with a friend. Don't forget to subscribe. And until next time, keep investing, keep learning, and keep growing. Appreciate you guys.
Multifamily Mindset.
Podcast. Think bigger.